Welcome back. This is Sage and you are watching Kalkine TV live from Sydney, and this is the mid-market pulse. Market trades flat. NIB Holdings shares zoom up 12%. S&P ASX 200 has opened this week's trade on a somber note, as at lunchtime the market added just 4.80 points and traded at 7,065.50. 8 of 11 sectors traded lower, with consumer staple shares coming under heavy selling pressure, followed by consumer discretionary and others. Financials gained by the maximum points by noon. NIB Holdings Limited, Perpetual Limited and Medibank Private Limited from this space traded higher today. NIB Holdings shares were up approximately 12% on Monday after the company said that the underlying profit for the group in the financial year 2021 was expected to be much stronger than the prior corresponding period on account of robust performance in the second half. The underlying operating profit for financial year 2021 was expected to be in between 200 million Australian dollars and 225 million Australian dollars. The underlying profit stood at 86.9 million Australian dollars in the first half. NIB Holdings also said that even as the coronavirus pandemic's negative impact on the demand and healthcare treatment was significant, the company's core Australian residents health insurance, or ARHI, business was performing well. NIB Holdings' underlying operating profit for the 9 months to 31st March was 140.9 million Australian dollars. The provision for deferred and suspended claims during the pandemic for ARHI was 59 million Australian dollars, as against 70.7 million Australian dollars for the first half of financial year 2021. NIB Holdings was also expected to retain some of the remaining ARHI COVID-19 provision on 30th June, subject to actuarial analysis at the time. The company would announce its financial year 2021 full year results on the 23rd of August 2021. And moving on, record COVID cases in India has put pressure on the crude oil demand. Crude oil prices traded almost flat today amid rising coronavirus cases in Asian countries. Brent oil futures for July delivery traded at US $65.17 per barrel, down 0.38%, as at 9:52 a.m. Australian Eastern Standard Time on the 26th of April 2021. While WTI crude oil futures for June delivery traded 0.32% down at US $61.49 per barrel. The prices were earlier boosted by better than expected April month's robust economic data on the US and Europe. However, rising cases in India, the world's third largest importer, has squeezed the energy demands. India has registered the highest spike in cases in the past 4 consecutive days. And now let's flick through some important news. Mainstream Group Holdings declared 272.2 billion Australian dollars in funds under administration, or FUA, for the quarter ended 31st March 2021. It represents a 21% increase on the previous quarter due to the onboarding of Pendal Australia. The Mainstream Group announced 47.4 billion Australian dollars FUA increase for the quarter, and funds administered increased by 162 to 1,364. Net inflows of 41.7 billion Australian dollars, and investor numbers reached to 176,000, an increase of 162. Funds under custody increased by 3% to 16.9 billion Australian dollars, an increase of 0.5 billion Australian dollars. Mainstream Group highlighted that the result is beyond their expectations and is the strongest quarter to date. Further, the management believes that the company is well placed to attract more significant clients, and the results reflect the company's continuous investment in enterprise solutions. Mainstream Group Holdings shares remained unchanged at 1.96 Australian dollars apiece. 4D Medical Limited released its quarterly activity report for the quarter ending 31st March 2021. In the quarter, the Australian Government Health Department granted $28.9 million Australian dollars funding to 4D Medican's JV Australian Lung Health Initiative Pty Ltd or ALHI. The funding will be provided from the government's Health and Medical Research Initiative Medical Research Future Fund or MRFF. The JV was established to produce the most advanced lung health care. The funding would be used in progressing the development of the lung function scanner, the XVD scanner. It is the world's first dedicated lung function scanner. 4D Medical also announced the successful completion of a share placement that raised nearly 40.0 million Australian dollars before costs. The placement was strongly supported by existing and new institutional and sophisticated investors. The placement was completed on the 11th of March 2021 and 4D Medical Limited shares declined by 1.544%. McGrath Limited announced its financial year 2021 profit guidance. Earlier, it had announced its financial year 21 half-yearly results on the 22nd February and declared underlying EBITDA of 6.6 million Australian dollars as against 1.6 million during the PCP. At that time, the company also expressed optimism about the results for the rest of the year as the positive momentum from the first half had continued in the second half. Based on current expectations, underlying EBITDA for the current financial year is expected to be in the range of 16.51 million to 17.51 million Australian dollars against the 3.7 million in underlying EBITDA during last year. McGrath Limited shares surged by 10.769%. On Monday morning, Sigma Healthcare Limited shares came under pressure after the resignation of Managing Director and Chief Executive Officer Mark Hooper. Mr Hooper served the post for nearly 11 years. Mr Hooper would serve 6 months' notice period and is expected to leave the company by the end of October 2021. The board stated that they would begin search activity for new CEO, both internally and externally. Sigma Healthcare Limited shares dipped by 2.899% on the back of the news. Westpac Limited on Monday said that its cash earnings in the first half of 2021 would be negatively impacted due to additional provisions for customer refunds, payments and other associated costs, along with an accounting loss on sale in Westpac Pacific. In the first half of 2021, the cash earnings would come down by 282 million Australian dollars after tax, Westpac said in its latest update. Even the statutory net profit would be lowered. Additional provisions for customer refunds, payments, associated costs and litigation provisions of 220 million Australian dollars. Write-down of capitalised software and other intangibles of 115 million Australian dollars. Costs associated with ending the group's relationship with IOOF of 56 million Australian dollars. Write-down of goodwill related to lenders' mortgage insurance of 84 million Australian dollars. Accounting loss on sale in Westpac Pacific, along with transaction costs and payments associated with divestments of 113 million Australian dollars. Westpac also said that it had changed its software capitalisation policy, increasing the threshold before a project is capitalised to 20 million Australian dollars from previously 1 million Australian dollars. This policy has been applied from the 1st of October 2020 and would see the group expend a higher portion of its investment spending from the first half of 2021. Westpac Limited shares were slightly up by 0.477%. And I thank you for your time watching. That's all for now, and we will see you shortly with more live market updates. This is Sage signing off.